All right, let's dive in. Today, we're putting on our lab coats and giving the global market a full health checkup. We're going to cut through all the noise, look at the vital signs, and figure out what's really going on. So let's get this examination started.
If you're following the markets, you've probably been getting whiplash lately. It's this dizzying mix of signals, right? One day you're hearing exciting news about innovation, and the next there are these worrying trends in things like oil. It's just a really confusing landscape right now, and it makes getting a clear read on the market's health pretty tough.
So what is the market actually telling us underneath all that chatter? Well, to figure that out, we're going to check its vital signs. We'll look at how different sectors are holding up and see what major tests are just around the corner. By the end, we should have a much clearer story.
Okay, first things first, we're starting our checkup with the big picture. You can think of this as the initial consult, where we just assess the patient's general condition before we start digging in any deeper.
Now, before we get into the numbers, this idea is super important. Market sentiment is basically the mood of investors. Is the market feeling optimistic and ready to run, or is it feeling kind of anxious and scared? Nailing down that mood is exactly what we're trying to do today.
All right, time for the first part of the exam, checking the vitals. Just like a doctor checks your pulse and blood pressure, we're looking at these really fundamental things, like oil prices and government bonds, to get a baseline reading on the market's health.
And here they are, the key vital signs at a glance. We've got crude oil trending down, but gold is going up. At the exact same time, the 10-year Treasury yield is ticking lower, while the euro-dollar rate is pretty much holding steady. These numbers seem to be pulling in completely different directions. So what's the story?
This is where it gets really interesting. This contrast says it all. See, falling energy prices can mean that economic activity is slowing down. That's a sign of weakness. But then you look over at gold and silver, and prices are rising. That shows investors are running for cover in what we call safe haven assets. It's a classic sign of anxiety. They're looking for a financial shelter from a storm they think might be coming.
And this number right here, 4.28%, it's telling the exact same story. This is the yield on the 10-year U.S. Treasury bond, which is basically one of the safest investments on the planet. When investors get nervous, they buy these bonds for safety. That pushes the price up, which in turn pushes the yield down. So just like with precious metals, the bond market is flashing a big, bright sign that says, caution.
So we've checked the overall vitals. Now it's time to get more specific. To really get the full diagnosis, we need to see how the different parts of the market body, the individual sectors, are actually performing.
Let's start with tech. It's a huge driver of the market, and right now it's giving us a very mixed diagnosis. The main tech index, the Nasdaq 100, is up a little, which is good. And yeah, the long-term buzz around stuff like AI is definitely still there. But if you scratch beneath the surface and look at individual stocks, the picture gets way more varied. Not every company is doing well.
And you see a similar story of contrast over in the pharmaceutical sector. It's facing some headwinds for sure, but a recent report from Morningstar actually pointed out some hidden opportunities. They're saying some of these stocks look undervalued. It's a great reminder that even in a sector that's struggling, there can still be pockets of real strength.
The housing sector just adds another layer to this whole puzzle. I mean, its health is so critical for the wider economy, but right now, reports show it's facing some serious challenges. You've got high prices making affordability a huge issue, and at the same time, there's just not enough inventory. This squeeze on housing is another really important and frankly, concerning piece of the puzzle.
So, after our whole checkup, what's the final prognosis? Well, the patient is stable, but it's complicated. To get a really clear answer, we need the results from a couple of final, absolutely crucial tests. So let's look at what everyone is waiting for next.
It really boils down to two major events on the calendar that could set the tone for everything. First up, you've got corporate earnings from giants like Cisco and Tencent. Their results are going to tell us so much about the real health of tech and global business. And second, we've got key economic data from the US, specifically on inflation and retail sales. That's our direct line into how the consumer is holding up.
And that brings us to the ultimate question. We have these two powerful stories that are fighting for control of the narrative, right? You have the story of future innovation, told through tech earnings, versus the story of present-day inflation, told through economic data. Which signal is going to be stronger? Which one will finally cut through all this noise and give the market a clear direction? That is the answer everyone is waiting for. Thanks for joining this explainer.